local governments. The committee also noted the continuous improvement in the level of external reserves, which stood at $46.699 billion as at March 29, 2018. Similarly, the oil share index rose by 8.5% from 38,243.19 on December 29, 2017 to 41,504.51 on March 29, 2018. Market capitalization improved by 10.2% from 13.61 trillion naira on December 29, 2017 to 14.99 trillion during the same period. The committee observed that while this development may be a reflection of improved investor confidence in the economy, it cautioned that the management of the bank should carefully monitor the developments and to establish mechanisms to safeguard the stability of the foreign exchange market in the event of a sudden capital reversal. The committee observed the continued rise in oil prices, but acknowledged the inherent volatility in commodity prices and urged the bank not to relent in building external reserves buffers against any future price downturns and as a means of sustaining investor confidence in the economy. The committee noted the relative stability in the foreign exchange market with declining premium across all segments of the market. It observed with satisfaction the sustained high level of activity at the investors and exporters window of the foreign exchange market. The window continues to attract more investors, thus boosting foreign exchange supply, and consequently total foreign exchange inflow through the central bank increased by 73% in February 2018 compared with the previous month. This was attributed to the increase in receipts of proceeds from petroleum profit tax, royalties, and crude oil and gas. Total outflow also increased in February 2018 by 15.69% as a result of higher payments for invisibles, interbank transactions, as well as joint venture cash calls payments. Overall outlook and risks. Forecasts of key macroeconomic indicators give a positive outlook for the Nigerian economy in 2018. This is predicated on the quick passage and effective implementation of the 2018 budget, improved security, foreign exchange market stability, as well as favorable crude oil prices. On the downside, the committee noted the potential impact of the 2019 election-related spending against the weak backdrop of tax revenue efforts, herdsmen-related violence, and rising yields in the advanced economies. Indications in the US and the UK point to higher interest rates in the short to medium term. The considerations of the committee. The committee noted with satisfaction the gradual return to macroeconomic stability as reflected in the third consecutive quarterly growth in the real GDP in the fourth quarter of 2017. It also noted the continued moderation in all measures of inflation, as well as sustained stability in the naira exchange rate, and urged the bank to sustain the stability to avoid emission drift. In particular, committee welcomed narrowing of the exchange rate premium between the BDC segments and the investors and exporters window of the foreign exchange market. Overall, the committee noted that the recovery of the economy was strengthening in view of the return to growth of the services sector. As the fiscal sector continues to settle its outstanding liabilities, it reduces its domestic debt profile, thus increasing the liquidity of the banking system. However, the Monetary Policy Committee observed increasing monetization of oil proceeds as evident in the growing FAC distribution relative to the 2017 levels of disbursements. Committee urged the government to initiate strong stabilization programs and to freeze the growth in its aggregate expenditure and fact distributions in order to create savings badly needed to stabilize the economy against future oil price-related shocks. Notwithstanding the general improvement in macroeconomic conditions, the committee noted the rather slow pace of moderation of food inflation. It also took note of the potential risks of a pass-through from rising global inflation to domestic prices. Members, however, expressed confidence that the tight stance of monetary policy would continue to complement other policies of government in addressing some of the structural issues underlying the stickiness of food prices. The committee noted that at 14%, the policy rate was tight enough to rein in current inflationary pressures. The committee therefore reaffirmed its commitment to price stability conducive to sustainable and inclusive growth. The committee noted with satisfaction the gradual implementation of the Economic Recovery and Growth Plan in an effort to stimulate economic recovery. In the same vein, the committee urged quick passage of the 2018 appropriation bill by the National Assembly so as to keep fiscal policy on track and deliver the urgently needed reliefs in terms of employment and growth for its citizenry. The committee noted the relatively strong balance sheets of the deposit money banks and the stable outlook. This is in spite of the concentration of non-performing loans in a few sectors, which the committee observed was satisfactorily being addressed by adequate mechanisms established by the bank to address the phenomenon. The committee also noted that as government pays off its huge contractor debts, a sizable portion of these non-performing loans will be addressed. The committee urged the bank to strengthen its supervisory oversight and early warning systems to promptly identify, monitor compliance with extant prudential regulations, sustain macro-prudential policy, and manage emerging vulnerabilities in the banking system. The committee reiterated the bank's commitment to delivery of low-interest credit as evidenced in its bold steps to adopt unconventional monetary policy to aid credit flow to vulnerable and growth-enhancing sectors of the Nigerian economy. The committee therefore enjoined the bank to continue to support and encourage credit delivery at single-digit interest rate through mechanisms in the interim, while encouraging the banking system to establish frameworks to increase credit delivery to the employment-generating sectors of the economy. In consideration of available data and evolving macroeconomic indicators, the Monetary Policy Committee is committed to revisiting its decision in the short to medium term as the fundamentals evolve. Committee's decision. In reaching its decision, the committee appraised potential policy options in terms of the balance of risk. The committee also took note of the gains made so far as a result of its earlier decisions, including the stability of the foreign exchange market, the moderation in inflation rate, as well as the restoration of economic growth. The launching of the Food Security Council by the federal government to improve food sustainability is a step in the right direction. The committee was concerned about the fiscal distortions associated with absence of buoyancy between the GDP growth and tax revenue, and urged the fiscal authorities to deploy appropriate corrective measures to address this phenomenon. The committee was of the view that further tightening will strengthen the impact of monetary policy on inflation, with complementary effects on capital flows, indeed positive effects on capital flows and exchange rate stability. Nevertheless, it could potentially dampen the positive outlook for growth and financial stability. However, the committee of the view that loosening will strengthen the outlook for growth by stimulating domestic aggregate demand through reduced